All right, good morning and welcome. It is Tuesday. It's time for Tuesday's strategy planner session. We have a little bit of weakness. Bear with me 1 second here. A little bit of background. A little bit of weakness overnight. Actually, there was weakness yesterday. It was a sell signal at the close. Very late sell signal. It's two targets. First target was met. Second target being met now. The first target was influential in that it produced a bounce back to yesterday's high. Yesterday's target, last calculable target, was 70.50 at the high. So there wasn't any traction gained despite yesterday's rally. Met a couple of targets along the way, influenced by them, and then exceeded those targets through a relevant window to put into play the next higher target. That didn't happen at the close. At the close, another target had been met, not left outstanding. So there is no higher target in play. That requires the rally, if it intends to extend, if it intends ever to extend, to regroup back and fill. So far, last night's bounce initially, a nice 61.8% retracement. So there's the makings of a pullback leg, of a correction, itself potentially being accumulative. So that when it has reached its objective, which basically is, in my work, it's a Fibonacci calculation along the line or lane of what's being corrected. So candidates, if we're going to get a 61.8% bounce, then it seems to make sense that a 61.8% projection would satisfy, but actually doesn't. I'd be looking more for 45.46. And a little bit of noise under it down to 40, call it 43. And if 45.46 doesn't suffice, there's actually room all the way down to 33. And in fact, in the blog, that's a big objective if sellers get going. Why would sellers be able to get going on a pullback all the way down to 33? Well, it's not just yesterday's rally leg that's being corrected. It's an entirety. The entirety of the latest leg. Let's do this on the 1 minute. On a little bit more clear on the 3 minute. We're not going to do a bigger picture right now, but just to point out, we're several days up from a low. Or as of this morning, mid-morning, late morning, we'll be three complete rotations off of the low. So that's a lot of buying pressure to have expended. Just high to low. And that's just the simplest calculation, not even the most appropriate. 33 barely even attacks the 61.8% retracement of that leg. And I don't anticipate necessarily all of that. I think the market's going to view it more as an attraction than having to meet it. So long as there's lower attractions, other attractions along the way become more probable. And that's 45, 43, 45, 48, 43, 46 being its singular numerical representation. So first available objective, basically 46, 48. Under 43, the room for noise around that would suggest we're heading to 33, 33 being the bias down target. So if 48's bias down signal can be triggered by 10:15, we'll even have an active outlook for 33. It will literally be in play. none of which is outright bearish. 2 days of rallying, of trending up, higher and higher closes. That's not going to be reversed or rejected in a single session. Not typically, not from so high. Instead, what we're looking at is this multi-session range. It is, yesterday is a breakout from this multi-session range. That is multiple consecutive sessions that overlap the same range. Yesterday is a breakout. Breakout is interesting, but it has yet to be confirmed by a second consecutive higher close. What's the significance of that? Well, a second consecutive higher close would then require at least an eventual third higher close. Not on any particular time frame. Kind of don't want to see it delivered immediately, because when it's not, and we know that there's a higher close outstanding during a pullback, that gives us confidence to make a stand, take a stand at a support or off of a support test in anticipation of just basically playing the arbitrage between that pullback and the outstanding requirement for a higher close. Not that I would buy every little dip or wait for dips to buy instead of shorting if the setups develop, but that's the significance of today producing an immediate second consecutive higher close, is that it would confirm that there's at least an eventual third higher close outstanding. If today just retraces or corrects and doesn't produce that higher close, that's not a reversal, and there's a 4-day sequence that could be developing of exactly that. Breakout, non-confirmation pullback, then breakout again. That would be tomorrow. It gets a little tricky with the holiday, the seasonal bullishness of the holiday, not to mention the cause of that, really, which is the contracting volume. And how that starts to interact. We're going to see a lot of just an exodus of traders tomorrow afternoon. Not a lot of volume, but that doesn't mean there can't be volatility, especially if there's any kind of a news item that suddenly drops. But right now, let's just leave it here. Wherever we open, 45, 55, as I described at yesterday's highs, would be a pullback objective. 45, 55, actually 56.50 to 58. 58 was responsive. So with 58 being responsive, its partner, 56.50, probably won't be. And here we are chipping away at it. So just greater likelihood we're heading to the bias down signal, which you can see on the 3-minute chart. 48 and the room for noise under it down to 46, so that's probably in play. But meet back here at 9:15 and we'll see if it has been tested, if it is still in play seemingly, if there's been some sort of a reaction up along the way. That may be trying to refuel sellers or else reverse it. Here's today's calendar real quickly. So nothing very high profile until this afternoon. This afternoon is FOMC minutes. And that'll be influential. It typically is. Price action tends to be inhibited by it just going into it. So late morning through the noon hour usually is not going to be very volatile. And if it is, that volatility is going to be very short-lived in the opposite direction. Also, when there aren't, I mean, it's not like this week doesn't have its share of high-profile items. LEI yesterday, durable goods tomorrow, consumer sentiment. So when there's not a lot going on, even the low-profile items they can have influence. They can influence price action, but these aren't very influential, historically influential reports. And there are no Fed speakers this week. They are overworked as it is, so they tend to take the week off. So, anyway, meet back here at 9:15. I'd like to see some kind of reaction to 5650. I think we may have seen it. It's created a little range here. It's a way too soon before the open to give this any reliable parameters, but right now, call it 55 to 61. Anything beyond either end of that is going to be the core of a bullish or bearish approach to the open. But again, we'll need to gauge what happens between now and the open against that, as well as yesterday's close, and any overnight retracements that we just identified. For instance, the 61.8% retracement back to yesterday's high. Other potential objectives, and see if we can get an immediately actionable signal either way. Gapping open creates a vacuum back to the prior close. There's not much of a vacuum though. It's kind of deceptive because so much was expended, so much energy was expended at the close yesterday, into the close. We'll meet back here at 9:15 for the tactical update, and we'll see what immediately actionable setups or just setups are available. All right, other markets. The euro, we've just been tracking a bottom and then its reversal. Trying to go ahead outside of this parallel channel that held nicely on its pullback and, as anticipated, has recovered back to the channel itself, the upper end, but now trying to shake free from it. And that's where today is, basically sitting at the upper end of it still. Gold and silver both completed pullbacks, testing pullback targets. 1970.50 was the pullback target for gold. Nice reaction to it. The gap open from yesterday's open under the two sessions was itself within a range. It doesn't require being retested from above. But we are getting some resistance here overnight, extending a little bit higher, but presumably that's the pullback, and that is done. Silver kind of flat. It came into its sweet spot of support, basically tracking the weakness, the ebbs and flows in gold's weakness, although it did trigger its own buy signal that outperformed on the way up, creating much of a position of strength. So again, anticipating that this is a pullback and this sweet spot of support is going to launch the next up leg. Long bond, another pattern we've been tracking its bottom, its reversal, and then it's just a little bit aggressive. It had every opportunity while it was forming this consolidation to dip even deeper, and if not opportunity, almost an obligation, not a requirement though, to dip as deep as into the gap or to engage uptrending support. Or just to retest the ranges low, which only held. It's not very apparent optimism at the low, although not probing the low when given the opportunity to isolate sellers, weaker-handed sellers, is a variation on, or a degree of optimism, restrained optimism. So that refueling, those trapped sellers, that restrained optimism, all that contributes to stronger-handed buyers that could have been formed, created, attracted, sorely missed just when they're needed most, and that is to sustain a break, or in this case breaks above the upper end of the range. So we're getting probes above the upper end of the range. They're chipping away at resistance. They're making higher lows. That is accumulation. That's the purest definition of it. But none of that accumulation is necessarily a timing element. It's creating a position of strength. So if there were a reaction down, it would be likelier to recover. Kind of looked like Twitter there for a moment. If there's a reaction down, which isn't going to be signaled from up here, it's just going to be noise, then it is going to be likelier to recover. Still like to see it engage, even if in a knee-jerk reaction to something. Still like to see it locate and prove this uptrending support exists. Prove that the uptrend exists. This is just getting a little too narrow. Breaking higher first isn't going to be coming from too strong of a base. It's already spent a lot of energy just to chip away at resistance. None of which changes the anticipation that we've had for weeks and weeks that this is a turn, that the bonds are reversing. We're not going to do TLT today, but pretty much the same picture. And then crude oil, which finally met a target. We'd had distribution all the way down, interrupted by the ugly events in Israel, and eventually, or after not too long, seemingly forever, basically the market deciding that the theater wasn't going to expand and that threats to shipping lanes, etc., wasn't going to be part of the equation. The ongoing decline resumed, and finally we had a confirmed breakout. I mean, we've had downside objectives, not that the decline can't resume, but there was a confirmed breakout that required at least an eventual third lower close. This is what I was referring to, how that's helpful because we know there's an outstanding lower close required for the pattern. But if the bounce of in this case, a bounce developed first, it came right into some really helpful proxy gap resistance. Didn't have to every single day. It could have just resumed the decline, but we know there's unfinished business below. Anyway, that has since producing that fresh low close, and there is no unfinished business below now, other than this gap under all prior lows that became unfinished business upon bouncing back into the prior range. So that, though at the time didn't exist until testing a prior range that enabled the bounce. The bounce is really extending higher than it has to. It's up at 78.22 overnight. But we're anticipating that this parallel downtrending resistance, now that it's being tested, basically, my sell signal now is under 76.70, 76.40, under 76.70, or 77, 76.70, 76.40. That now should trigger the test of unfinished business. That's the proxy gap. It could fill the gap. That's the next opportunity for a low. That would form that semi-retracement back to parallel downtrending support in basically a channel to meet that 61.8% retracement back to the lower end, and then reverse back up through the upper end. I would look at that very bullishly. Otherwise, the opportunity for a bottom could be developed by probing that low, probing last week's low back into this previous consolidation. The upper end of it was barely nicked here, so it's a little dubious that it should be qualified already to serve as a low anyway. A little deeper dip, maybe to the apex of the triangle, 68.50, 69. But not necessarily over yet. And then Bitcoin, still teasing. I mean, yesterday, 24 hours ago, we were looking at this pattern, and I pointed out, uh, noted just this pullback potential. The delay had made it pretty much a likelihood that we were going to dip into this support area. And it's really just the upper end that needs to be tested. And it was tested not just once, but twice yesterday. Responsive more and more so both times. So we can't get better confirmation than that this is a relevant support. By the way, having tested and responded to that relevant support twice, there becomes less and less bullish reason to retest it. Either it is support or it's not. And it's definitely bringing out buyers if those buyers aren't strong-handed enough to resume the rally, and that low is tested, probed down to its counterpart. Its counterpart in this case coincides around 36.6. There's no bullish reason to return to 36.6, a fresh low in here, let alone probe under it. Probing under 36.6 at this point would put into play at least a retest of this last touch of trendline support. That's about 36,650. That would be the next opportunity for bounce. It gets a little sticky down there. I mean, we are never going to be able to go back in time and change the fact that this prior high stopped pessimistically short of the high, which from a contrarian perspective is potentially bullish, or that this current high has stopped pessimistically short of its prior highs. Again, all compounding to a, from a contrarian perspective, potentially bullish setup that itself doesn't contribute to timing, but does contribute to the quality of a breakout. We'd expect a breakout to be that much more explosive the more pessimism builds up at the bounces, unless and until that pessimism is justified. And that's why it's so important to stay away from a prior low where we've seen extreme optimism. If that's broken, if that back is broken, then even in the most bullish scenario, the pattern has to reset. So could be that news is inhibiting this. There's in the last 24 hours or fewer, there's a SEC suit against Kraken. There's a exchange Bittrex that's decided to close. So not that any of it is necessarily bullish or bearish, but it is contributing to or inhibiting sponsorship from getting too involved, from bidding price up until those items are absorbed. And just the fact that those items, seemingly negative, aren't already on their own breaking or influencing price, serving as any kind of catalyst to break under a prior low, that in itself can be considered bullish or anticipated to be a bullish factor. So that's really it on Bitcoin. Any questions, please ask. But meanwhile, meet back here at 9:15. See if we get any immediately actionable setups, and then what specific parameters the open is going to be looking at anyway. Nice rubber band stretch, so I do expect that we get a morning trade out of this. All right. Good luck today. Good morning and welcome. It is Tuesday. It's time for Tuesday's strategy planner session. We have a little bit of weakness. Bear with me 1 second here. A little bit of background. A little bit of weakness overnight. Actually, there was weakness yesterday. It was a sell signal at the close. Very late sell signal. It's two targets. First target was met. Second target being met now. The first target was influential in that it produced a bounce back to yesterday's high. Yesterday's target, last calculable target, was 70.50 at the high. So there wasn't any traction gained despite yesterday's rally. Met a couple of targets along the way, influenced by them, and then exceeded those targets through a relevant window to put into play the next higher target. That didn't happen at the close. At the close, another target had been met, not left outstanding. So there is no higher target in play. That requires the rally, if it intends to extend, if it intends ever to extend, to regroup back and fill. So far, last night's bounce initially, a nice 61.8% retracement. So there's the makings of a pullback leg, of a correction, itself potentially being accumulative. So that when it has reached its objective, which basically is, in my work, it's a Fibonacci calculation along the line or lane of what's being corrected. So candidates, if we're going to get a 61.8% bounce, then it seems to make sense that a 61.8% projection would satisfy, but actually doesn't. I'd be looking more for 45.46. And a little bit of noise under it down to 40, call it 43. And if 45.46 doesn't suffice, there's actually room all the way down to 33. And in fact, in the blog, that's a big objective if sellers get going. Why would sellers be able to get going on a pullback all the way down to 33? Well, it's not just yesterday's rally leg that's being corrected. It's an entirety. The entirety of the latest leg. Let's do this in the 1 minute. On a little bit more clear on the 3 minute. We're not going to do a bigger picture right now, but just to point out, we're several days up from a low. Or as of this morning, mid-morning, late morning, we'll be three complete rotations off of the low. So that's a lot of buying pressure to have expended. Just high to low. And that's just the simplest calculation, not even the most appropriate. 33 barely even attacks the 61.8% retracement of that leg. And I don't anticipate necessarily all of that. I think the market's going to view it more as an attraction than having to meet it. So long as there's lower attractions, other attractions along the way become more probable. And that's 45, 43, 45, 48, 43, 46 being its singular numerical representation. So first available objective, basically 46, 48. Under 43, the room for noise around that would suggest we're heading to 33, 33 being the bias down target. So if 48's bias down signal can be triggered by 10:15, we'll even have an active outlook for 33. It will literally be in play. None of which is outright bearish. 2 days of rallying, of trending up, higher and higher closes, that's not going to be reversed or rejected in a single session. Not typically, not from so high. Instead, what we're looking at is this multi-session range. It is, yesterday is a breakout from this multi-session range. That is multiple consecutive sessions that overlap the same range. Yesterday is a breakout. Breakout is interesting, but it has yet to be confirmed by a second consecutive higher close. What's the significance of that? Well, a second consecutive higher close would then require at least an eventual third higher close. Not on any particular time frame. Kind of don't want to see it delivered immediately, because when it's not, and we know that there's a higher close outstanding during a pullback, that gives us confidence to make a stand, take a stand at a support or off of a support test in anticipation of just basically playing the arbitrage between that pullback and the outstanding requirement for a higher close. Not that I would buy every little dip or wait for dips to buy instead of shorting if the setups develop, but that's the significance of today producing an immediate second consecutive higher close, is that it would confirm that there's at least an eventual third higher close outstanding. If today just retraces or corrects and doesn't produce that higher close, that's not a reversal, and there's a 4-day sequence that could be developing of exactly that. Breakout, non-confirmation pullback, then breakout again. That would be tomorrow. It gets a little tricky with the holiday, the seasonal bullishness of the holiday, not to mention the cause of that, really, which is the contracting volume. And how that starts to interact. We're going to see a lot of just an exodus of traders tomorrow afternoon. Not a lot of volume, but that doesn't mean there can't be volatility, especially if there's any kind of a news item that suddenly drops. But right now, let's just leave it here. Wherever we open, 45, 55, as I described at yesterday's highs, would be a pullback objective. 45, 55, actually 56.50 to 58. 58 was responsive. So with 58 being responsive, its partner, 56.50, probably won't be. And here we are chipping away at it. So just greater likelihood we're heading to the bias down signal, which you can see on the 3-minute chart. 48 and the room for noise under it down to 46, so that's probably in play. But meet back here at 9:15 and we'll see if it has been tested, if it is still in play seemingly, if there's been some sort of a reaction up along the way. That may be trying to refuel sellers or else reverse it. Here's today's calendar real quickly. So nothing very high profile until this afternoon. This afternoon is FOMC minutes. And that'll be influential. It typically is. Price action tends to be inhibited by it just going into it. So late morning through the noon hour usually is not going to be very volatile. And if it is, that volatility is going to be very short-lived in the opposite direction. Also, when there aren't, I mean, it's not like this week doesn't have its share of high-profile items. LEI yesterday, durable goods tomorrow, consumer sentiment. So when there's not a lot going on, even the low profile, I would look at that very bullishly. Otherwise, probing last week's low back, be qualified already to serve as a low. And then Bitcoin still So just to point out, here's what members were just emailed. They could go to the blog and see this as well in the videos section. It is the daily pre-open plan, strategy planner. And it contains the link to the strategy planner session we just had, the video. Links to different elements, other web pages, other pages on the site that have relevant information, and then of course the link to this room. Or how to get in the room. It's not a direct link, but we covered crypto at the 1945 mark. So it starts out, there are 3 sections to the update, to every update. 3 sections to every update. And they basically, I designed them to transfer information from my head to yours. Very specifically. At first I visualize, I help you to visualize. Here's what's going on. Verbally visualize where we left the market previously. This is basically an overview of yesterday's session. Here's an update since then, connecting the dots from yesterday's relevant price points and developments. Here's what to keep in your frontal lobe when processing what has happened since then. There was a last-minute drop. It reacted up initially. Greeted Europe's opens back down at 58 on the way to 55. These are relevant levels, timing windows. Here's catalysts for today's session. There aren't any active setups. Sometimes we'll have an overnight probe beyond the prior session's range that's being rejected, threatening to be rejected. Either way, that's a setup. There's a name for that. There's a name for trending relentlessly overnight. You'll never guess what it is. Relentless overnight trending. But these are all setups. If we see any specific, if any of this price action has formed a specific setup, we'll know what we're looking at, and then we can go to the knowledge base and pull up all the past instances in the last several years of that exact same setup. And then see similar situations and graphically be able to look at images of how the market has looked at the same point in that setup and then how it's resolved, to be able to get a visual on what to expect. And then the final section, here's basically what we're looking at. It's a little bit more verbose at the morning strategy planner, just because we're basically laying out the framework that's being transferred from day to day, and the bigger challenges and rewards or consequences. But essentially, coming down to what's the action levels, triggers, and tactics. And really, this is a companion piece at this point, the Do It section, to the vidiROOM itself. The vidiROOM is an upcharge, of course, in the promotional offer that I've got linked in the YouTube chat. In the promotional offer, there's 3 free terms to the vidiROOM, so you don't get charged for almost 3 months. $200 each time, so $600 savings. So that's really, if you want, especially the first term, if you really want to immerse yourself in it, or if you really want to get along the learning curve quickly, you should immerse yourself in it with the vidiROOM, with being here for the strategy planner session or watching the video. And then at 9:15 there's a pre-open update, and then being in here the busiest ongoing discussion that I hold is during the first hour plus. That's when we see the most setups as well. So that's where the learning curve is really, the biggest moves along the learning curve are being in the vidiROOM, along with the updates, and then just a snapshot every time, every update, relevant levels. I mean, these have been available, not surprisingly, 45.55. Very influential overnight. So this repeats. There are 4 of these updates intraday. And if you go to the blog and view the blog post, here's what it looks like in the blog. Same everything, but if you go to the blog post, a little more flexibility, functionality. But that's all included with the deal, with the promotional offer that is linked in the YouTube chat. You can click through on its link. Scroll back on the chat and you'll see it. It's a couple, 3 posts higher. Become a paying member too at a substantial savings here. But if you, and here I'll show that real quickly. So you can't just happen onto the site and get to this page. You have to have the direct link. But basically, you start with $175 every 4 weeks. And the first 3 terms renew at $175. Or first 3 terms are $175. And then after 3 terms, if you want to keep the vidiROOM, it's an additional $200. And it's worth it. Coaching calls, live attendance in the not just the pre-open strategy planner, but at 3:45 we have a market wrap. Anytime during the day, if you're in a stock or looking at a stock, you can throw it out there and a request for me to look at it for a particular reason. What am I looking for? Long entry, short entry, stop, whatever. How it's setting up ahead of earnings. Where's the, there we go. So just real easy, that's me. Very much worth it. The learning curve alone is a big deal to be able to move along it pretty quickly. But you'll see the market from a different perspective. Actually, what the market's trying to say. Not how it's being, not how it's responding to what people are saying. Not as big a nuance as you'd think. All right, so any questions, please ask. 9:15 will be the pre-open update tactical planner. See you then. Oh, and I should also say, you probably noticed, there's a lag. If you look at the chart and you've got your own charting, you know there's a lag. I mean, look at the time down here. Look at the time stamp. And then look at your own clock. That's delayed. Well, that's because you're looking at this through YouTube. And YouTube has a lag. If you're a member, you're live in the room and you're seeing the live chart. There is a latency through YouTube. You get what you pay for. All right? Good luck today. All right. And so if you were present for the strategy planner session, and at that time price was 45.55, and I was pointing out that trade that we in the vidiROOM yesterday at the close had identified and the objectives for it. And sorry about this. So, and then the counterpart, I went through all this, and if you have watched the video, you know what we were looking at, expecting this then not to hold since it had already responded to 58. 5650s test said that's not going to hold. We're on our way to 48. 48, 46. 48 being tested now. Room for noise under it at 46. But this is basically what this is just pointing out, here's how things work in the vidiROOM. I lay out the parameters, and not that every setup is successful or productive, but that's the whole point, though, is to identify the parameters and the expectations, and to describe the reasoning, the actual analysis or methodology that goes into it. So just to point out now, we're testing, if you look on the 3-minute chart on the left, we're testing the red line, the bias down signal, which is relevant. It's relevant support, but it's going to be predictive after the open. After the open at 10:15, actually, if you look at the timeline below the charts, there's the first 15 minutes, there's the AM bias window. At 10:15, if we've tested, post-open, tested the red line, pre-open doesn't matter, but post-open, if the bias down signal is tested, holding it or not at 10:15 will determine whether it's going to break lower to its bias down target, or whether it's going to react up for an offsetting test of its bias up signal. Nobody forced sellers to expend so much energy that they were going to test the bias down signal. But if they test it post-open and they don't bring enough reinforcements to break it, then they'll be isolated, they'll be squeezed, and they'll basically be the catalyst to help to trigger a reaction targeting the bias up signal, a reaction to the offsetting test of the bias up signal. And that's the way that works. Or if at 10:15 the bias down signal has broken, that'll put into play a test of the bias down target. But meet back here at 9:15 and I'll update any current parameters. Any questions in the YouTube simulcast, please feel free to ask. Remember, this simulcast ends at noon. Often, once every 4 to 6 weeks, we'll do a 2 consecutive morning open house. We're only doing one. I don't think tomorrow's going to be a great trading session, or at least not reliably. I actually do think we're going to have a trade in there, but not enough to keep the room open. So that doesn't change the offer. You do need to take advantage of the offer. You get 3 free terms to the vidiROOM, $600 value. Cancel anytime. But this is this trade that I literally spelled out in real time. Under 55, targeting 48, perhaps lower, and here's why and how to know. That's what we stick around for the morning. That's what we do all morning long, all day long. All right. See you shortly. right, welcome back. So as we greet the open, we've basically engaged 45, 48, the bias down signal. Now the way the bias signal works is it's influential. It is the product of patterns that were in play or place through yesterday's close. And so by virtue of testing 45, 48, that is satisfying some degree of selling pressure from those patterns. And if those patterns, the ones that I've identified through vidiTrade methodology as being most significant and predictive, if at 10:15, which is the bias window, at 10:15, if the bias signal has been touched post-open, this doesn't matter pre-open, post-open touch 45, 48, fail to trigger it, hold it at 10:15, that'll be a reverse bias putting into play an offsetting test of the bias up signal. Now, if it's not actually touched, if neither bias signal is touched, we don't get a objective, we just get the limitations. We know the bias signals are likely to contain the morning's range. Trigger the bias down signal at 10:15, under it at 10:15 would put into play its target. That's how that works. And a lot can happen between now and the open. I've seen, of course, everyone has lots of bias signals being tested that by the time we get to 10:15 are already testing the opposite signal. A lot can happen, but right now we trade what's in front of us. 10:15 isn't exactly in front of us. The first 15 minutes is. And considering where we're at through the first 15 minutes, if we have room for noise under 48 at 46, if you were in the strategy planner session, you heard me describe that. So we haven't actually tested 46, which means that it is basically, kind of think of it as a proxy for the low for 48's test. 48's test got to 47. Well, there's room for noise under it to 46. If we test 46 post-open and break it by 9:45 through 9:45, I would anticipate going on to actually trigger the bias. And I would anticipate if 46 maintains its break through 9:45, that the bias down signal won't be recovered, that it will trigger. If 46 were tested post-open but not maintained, its break wasn't maintained through 9:45, I'd expect the bias down signal to actually hold its test, putting into play a reverse bias. So we'll be talking through this through the open. I'm going to label it as a sell signal, just knowing, though, that it has to be broken. And there's certain criteria for that as well. Again, that I'll be talking through in real time through the open. That's the downside. As far as the upside, it's been relentless, so kind of difficult to anticipate an immediate recovery, but there's room for noise up here to 54. So a bounce to 54 actually, post-open bounce has at first a greater degree of likelihood for reversing back down. Not necessarily precisely, but we'll assess that as we get into the open. Any questions, please ask. I'll be right back. All right, so at the open, still no actual touch. 45.48, at least the point is we're not opening under it. So we have yet to touch 45.48 post open. So if 45.48 isn't touched, that won't qualify as a reverse bias. That wouldn't stretch the post open rubber band enough that it can snap back up. But pretty close. 3 ticks. See what happens here. If there is first enough strength, enough counter trend action that would pop up to 54, or even afterwards. Well, there's 48, so now it matters. If 48 is triggered or not, there is an alternative, and that is that we would have the benefit of knowing there's an attraction above. Now, whether or not 48 triggers will depend at 10:15 if price is above or below it. It doesn't matter now. It's certainly relevant. It's the objective of patterns. If it breaks through a relevant window, those same patterns project out further. They engage with other patterns. That's how I derive the 33 as the next objective. But meanwhile, just anticipating that we get a touch of one or the other. And I'll tighten these inflection points as possible. We have news coming at 10, economic report. It's not high profile. It's not reliably influential. We have FOMC minutes coming at 2. High profile, reliably influential to price action. No Fed speakers. NVIDIA earnings after the close. Even though individual company earnings don't have an effect on the overall direction or general direction of the market, they can inhibit price action, especially if participants, fund managers, hedge funds, if they have a large exposure to that one stock, and it's a stock that can swing widely in reaction to earnings, they're probably going to sit tight, or usually they will be reluctant to get too engaged in the afternoon ahead of earnings because their P&L may take a big swing in hours or minutes. There's ongoing speculation that there's a ceasefire / hostage deal in the works in Gaza, and obviously none of that is trustworthy until actually announced, and even then. But I would expect, as headlines do, that if there is such a headline, that it triggers a knee-jerk reaction, a favorable knee-jerk reaction. And because it has zero to do with the market, I would expect its knee-jerk reaction to be reversed. Retraced, 61.8% of it at least. That's the pattern. Sometimes 38.2% of it before it goes on to a new extreme, and in that regard we have a really interesting setup. Be prepared for that. So we don't need any movement here. I mean, we can't be overlapping 48 at 10:15. Still overlapping 48 at 10:15, and I have a specific definition for that. If it is touched within 3 minutes of 10:15, either way. But still overlapping the bias down signal at 10:15 would invoke a grace period through 10:30. But other than that, price can just sit still here, bounce a little bit at 10:15 or into 10:15, and just by virtue of that, put into play an offsetting test of the bias up signal. So the overnight has stretched the rubber band. The post-open has dipped just enough to engage a relevant level that either triggers or doesn't. And if it doesn't, there's consequences. Just as if it does, there's rewards. Just looking at the bigger picture. Let's go ahead and calculate the proxy gap. That is the 61.8% retracement between yesterday's cash session close and today's open. So in other words, we're gapping open. Yesterday's cash session close equated to 62.25. Today's opening print is 50. So this is the proxy gap between yesterday's 62.25 cash session closing equivalent and today's 45.50 opening print. That's the 61.8% retracement at 57.50 is a proxy for the actual gap back to 62.25. And there's influence at its counterpart, the 38.2% retracement at 54.75, 54.50. And there's rules that we can expect price action to behave by. If the 38.2 were met while RSIs were overbought or not, or diverging. So we do have a blip down. That is consequential until this blip down, albeit a blip down. Until this blip down, the pre-open extreme had not been tested, pierced, or probed. It's barely pierced. It's not, I'd want to see a wider range for this example, but so long as we're doing that, let me just point out, having probed the overnight low at 9:45 to have recovered the opening print. What was the opening print? 45.50? Having probed the overnight low at 9:45 to have recovered the 45.50 opening print would start to be bullish. I'll abandon this sell signal at 54 if that's the case. It's not a very good example. Optimally, we want to see real selling effort get trapped. Any questions, please ask. Not a lot of stuff to ask about, but in anticipation. All right, so there's the first 15 minutes. First 15 minutes have elapsed, and they're not exited under 46, under the room for noise. So we don't have any greater degree of light. By the way, 46 hasn't been tested. And here we are. we aren't actually done with the first 15 minutes, and there's 46. So 46 being engaged, but it's too late to dispose of this test. The disposition of this test will come too late to know whether 46 intends to hold or not. Had this been tested and held, reacted up already as of right now, we would build into that room for noise under 46, the anticipation that 48's bias down signal wouldn't trigger. And we could start making all sorts of adjustments on that and expectations. Or alternatively, if 46 being tested by now and probed and probing under 46's inflection, we'd have anticipated 48 intends to trigger as well, the bias down signal, and there's a hard target that would create. Don't have that information. By the way, now that we're testing 46, the room for noise, if it is rejected, if it holds and snaps back up, that's not to say it can't get to 54 and still react down. I'm actually going to give it a little bit more room because of that test. Call it 54.50. But now it's sellers that would be trapped. Not a whole lot of them. Again, not a very deep test here. So not a lot to trap. But now it is sellers that would be trapped as opposed to immediately bouncing and trapping impatient buyers. Even going to get less aggressive than that, coming up to 56.50. Now, at some point, we might be able to identify a buy signal. We don't have to wait. Usually, for 10:15 to trigger the bias, the inflection points and their tests. Well, we have static tests. These are these specified timing windows. Those are static tests. As of 10:15, above or below 48 would do this. There's also dynamic tests. Dynamic test means that they're triggered on the fly by something, some action. And that's the 3x3. 3x3, or during the first hour, just to account for noise, 4x4. So, in other words, when an inflection point, and an inflection is any brief burst of a horizontal line, like this blue line, you'll see red and green lines as well. They are inflection points. And an inflection point can be touched and pierced. It's not relevant until it's actually probed by a minimum of 4 ticks during the first hour. 3 ticks any other time of day. Once it is, a countdown begins. Again, 4 minutes during the first hour, 3 minutes any other time of day. So 4x4 or 3x3. And I have my inflection point identify when price action is doing something relevant. Price action then tells us what is relevant about it. At what extreme, in this case, what's the 4 minute, minimum 4 tick, 4 minute extreme? We don't have one because the inflection point is 46. It's been pierced by only 3 ticks. We don't have a countdown yet. No countdown underway. Let's say that were probed by at least 4 ticks. We'd be counting down 4 minutes. As soon as we knew, it doesn't, all 4 minutes don't have to be spent under the inflection point, but as soon as we knew where those 4 minutes extreme was, we'd know how much lower price would have to move for that to be the work of reinforcements. Maybe you want to start trading or get exposed on the first pierce of the inflection, or wait for the 4-minute extreme to be established and then sell that. Wait for it to be established and sell the bounce. Like right now, a bounce could be shorted because we're testing the sell signal. Not really testing it in this case. In my example, we are, but we haven't pierced it by at least 4 ticks, so there's no actual test here of a sell signal. This is just support. Could be buying this. This is literally to buy that test of the sell signal is the cheapest long entry because you know so quickly you're wrong. It is support. See how it's behaving as support? It hasn't been pierced by at least 4 ticks. There's no countdown underway. This may ultimately hold. 48 may ultimately hold through 10:15. 46 had an opportunity. So subscribers are able to ask questions in a chat. This is what the chat looks like in the vidiROOM. So a question, can I flip quick to the Bitcoin chart with the line in the sand? And there was no bullish reason to even revisit yesterday's lows. This is make or break then to isolate this test as quickly as possible. We can make that into a buy signal. Back above these higher prior lows, back above 37,150. Its last reaction up was 37,250 or so. Let's call it 37.3. And something else interesting here is the first 15 minutes range has been probed since then. First 15 minutes range has been probed since then. And so shallow, such narrowness to it all that we can't be too enthused about rejecting it. But back above the other end of the first 15-minute range into the into the top of the hour would be bullish. So I'm now not interested in the long. I'd look for a bounce if this does catch above the upper end of the first 15-minute range, isolating to that degree the probe under it. So back above 51. I'd now start to consider as long. Um, Getting closer to 10:15. There's still time for a bounce that fails and ultimately triggers bias down. I don't want to read too much into a bounce, if it even develops. But if it does, I would look for the proxy gap to be tested. So above 51.25, targeting 57.50. So 6 points of upside. Let's say I want a 1 to 2 risk to reward. Can I manage that with 3 points of a stop? I think that's pretty easy. Long entry 51.50. I don't even want to stop at 48.50. I'd want to be closer than that. And that's if that triggers. It's really not necessary to take every trade, but at least to see where or how big of a bounce is possible before even threatening to reverse momentum up. But that 3 minutes, 4 minutes, that's the usual attention span of weak-handed counter-trend sponsorship. If they can't get it done, a reversal, whatever their intent is, confirmation, if they can't get it done after that, they are weak-handed. And another 15-minute checkpoint. We've had 3. There's the open is the first 15-minute checkpoint. even though 0 time has elapsed. Then, of course, 9:45, 10 o'clock. There are 5 15-minute checkpoints in the first hour. Again, inclusive of 9:30 and 10:30, both of them. If 3 of them are overlapping the same relevant level, I call that a dry cleaner's morning. And I anticipate really unpredictable volatility, if volatility at all. If 3 are overlapping, 3 of those 15-minute checkpoints of the first hour are overlapping the same relevant level. These aren't, not yet. The open's higher. But we can reverse engineer that. If I'm not expecting, because of other characteristics to this open, to how it's greeted, what it's testing, if I'm not anticipating a dry cleaner's morning, in other words, better off running errands. If I'm not anticipating a dry cleaner's morning, then I expect that there won't be 3 of the first hour's 5 15-minute checkpoints overlapping the same relevant level. And we've overlapped 2 already, so it's time to get out of here. YouTube simulcast visitors, don't forget to please like the channel. I'd appreciate that. I don't know why I'm told that I would appreciate that. And follow it. I do know why that, so that you'll know when the next stream is available, the next simulcast. But also scroll back up and you'll see, or I'll just go ahead and repost it. You'll see the promotional offer. I usually don't trot it out until the second day, if not the end of the first morning, just because this is usually a morning thing if you want to stick around for the afternoon. But click on that and you'll see the terms. It is it's renewed every 4 weeks. Everybody in the membership room that you're watching on a kind of a delayed basis, they're getting it real time. There's some latency when it feeds through YouTube. But they have access to the website, to the knowledge base. They get it all day. Actually, the vidiROOM opens Sunday at 6 with Globex and closes after Saturday morning's Saturday review, weekly Saturday review. But go ahead and click on that. It's $175. Everybody in the membership room is member for $175 every term, every 4-week term, plus $200 for the vidiROOM access. $175 gets all the website, knowledge base, email alerts, recordings. $200 gets the vidiROOM, which is absolutely must do to hurry along the learning curve early on. But the first 3 months of it, first 3 terms are free with that promotional deal. And I know it's not going to be very busy, obviously, over the holidays. Over the holiday, I should say. But the offer won't be there, so even though you won't take as much immediate use of it, you have to get it right now. And you know, if you try it and you don't, on an extended basis for a few days, if you give it that shot and it's not for you, that's fine. We can figure that out. But you are able to cancel anytime. So that's it on news until FOMC minutes. At least scheduled news. It's interesting how the timing windows work because we can see one timing window has the characteristics of the sponsorship that's dominating it. And suddenly, when that timing window lapses, that is, for instance, at 10:15, suddenly 10:15 or 10:15 to 10:30, suddenly there's just a paradigm shift or a change in behavior, almost like a switch is thrown. So I should point out that this 38.2% is derived from the proxy for yesterday's close. Yesterday's cash session close to today's open reflects a degree of sentiment. The 61.8% retracement of it, that represents a proxy for the close. The 38.2 represents sort of a proxy, but the room for noise around the open for that sentiment. So the fact that we've actually engaged the 38.2 and the 38.2 has been responsive suggests that this is still part of the open. This is still very much part of the opening sentiment. It may not look like it because the opening sentiment was a pretty significant gap. But in fact, having engaged with its own projection, responding to it, Is anybody else seeing a black screen? Everybody sees the charts? Yeah, if you're seeing the black screen, please reboot and let me know if that didn't work. It looks like you logged in here twice. Let me get rid of you and log back in. Is that all right? Should we try that? If I release you from this end. All right, did that work? All right, great. All right, so as of 10:15, notice that the bias down signal at 45.48 has been touched within 3 minutes. So that invokes a grace period. So what would have been triggered at 10:15 now has to wait for 10:30. In the afternoon, it would be 1:20 and 1:30. So the 10:15 bias signal has to wait until 10:30, and at 10:30 it's certainly possible that we're still or back to overlapping 45-48. That is a signal in itself, but in this case, the bias signal hasn't been rejected. It hasn't been triggered. It's still in the process of being tested. My inflection, my sell signal, hasn't been pierced by at least 4 ticks to start a countdown either way. But we should start to see price action behave as if it intends to do something, because the crowd that is basically dominating or influencing behaviors through the open, they're largely finished. Now the grace period says that there's still some stuff they're working through. Usually they'll have been done with it by now, or often. Usually they'll be done with it no later than 10:30. See if we can get the party started here. So now there's actual movement. It's not yet 10:30. It's a lower low. That's interesting. If the bias down signal ultimately doesn't trigger at 10:30, if it's recovered, if the first 15-minute range is recovered, there's that much more selling pressure that'll be isolated. By the same token, we've now started the 4-minute countdown to testing an inflection point. It had been pierced previously by only 3 ticks. But this is 4 ticks testing, and anything lower than the first 4 minutes would be reinforcement. So far, we don't know if it's just the usual attention span of weak-handed counter-trend sponsorship. They make a move. They didn't have to, but they did. And if they can't attract reinforcements under their 4-minute low before snapping back up above their 4-minute detour, they are allowed 4 minutes of detouring back above the sell signal. If they can't attract reinforcements, then they'll be isolated. But they are not doing that. They're extending. It's in time. It's making the bias down signal likelier to trigger. There's another projection from the proxy gap. There's 45.43. Under 45.43 through the first 15 minutes would also have been that much more likely to have triggered bias down. By the way, we now consider a bounce limit, an inflection point. Not a signal, but as corrective containment. Not that 45.25 can... I'm sorry, 45.25. Not that it can't be probed and still resolve down. But just like this inflection point, probed by at least 4 ticks, start the 4-minute countdown. The bounce limit can be probed by 4 ticks, start the 4-minute countdown. Anything that contains it, we assume, is just weak-handed counter-trend sponsorship. So it's a good short entry. Like a switch has been thrown. Bounce limit is now 42.25. And clearly we're going to be triggering bias down. This is actually a late bias down that's kind of irrelevant because it's being triggered from under the pre-1015 low. So the distinguishing it as a late is just for the historical record when we send the bot through. But it is a bias down, and the 33 bias down target is in play. that's the hardest part about trading is, well, to some, finding the levels, picking the signals. You just subscribe and get that easily. It's the patience. That is the hardest part.
That's the hardest
But it is worth the wait. It's worth the wait, not only when we get setups like this, very satisfying, but also because we're not exposed to randomly wrong directions. Something to point out is how, I mean, it's not that long in duration, but it is a pretty extended leg and it hasn't touched a bounce limit yet. And this is a relevant support. 40.75 is bounce limit. This is a relevant support. Again, projection calculated from the gap or the yesterday's cash session close to today's opening print. We knew from the open had engaged the 38.2 projection and hovered there, didn't reject it. It was still influenced by the same crowd that had created the gap. So just overlaying that on an otherwise nondescript price action gave us the anticipation that we were heading lower. At least during the first 15 minutes, had there been a bounce, we would have been willing to sell, wanting to sell it. So again, another Fibonacci inflection, or inflecting again at another Fibonacci projection from the proxy gap. What does that tell us? That same crowd that created the gap is still influential. Price is still responding to their inputs, to their herd mentality and mass psychology, as expressed numerically, mathematically. Fibonacci calculally. That's not an actual word, though. One more point to make here is that RSIs are oversold. Simultaneously oversold 1 minute and 3 minute RSIs. During the first hour, during the open, that doesn't require being retested. If suddenly that oversold condition produced a bounce, and similarly, if it were a bounce or if we were rallying into overbought conditions, after the first hour, which we are now, after the first hour, simultaneously oversold RSIs says that if there is a bounce, not that there will be, that's not a buy signal, but if there is a bounce, that it's going to fail. Likely. At least at some point, that low, the origin of that simultaneously oversold RSIs, should be retested. We even consider it to be unfinished business. And the earlier that construct appears, like right now, the likelier that it will be neutralized the same day, if there's even a bounce, by the way. You just don't get simultaneously oversold 1 minute, 3 minute RSIs unless there's something substantial behind that. All right, questions. On a bigger picture, would I expect 33 target to hold or not necessarily, since Tuesday morning can still launch a bigger down leg? I don't know if the second half of that sentence is the premise. I don't know what that's based on. If it's not the premise, I can just say 33 is in play and its resolution is going to be predictive. Question, maybe I asked you this before, but do you actively trade these setups throughout the day? I can't trade them all. I try to get off trades. It's just impossible to do both. I wish. It is frustrating for sure. Can you please post the link for where the unfinished business levels are posted? I recall there's one. That's the reference link. It's in every single email that you get, the email alerts. Right at the top where it says references, or reference. Do you have that? Let me know if you don't have that and I'll go track it down. But good point. There's unfinished business that can remain outstanding. There's several that are in that section, I know. Let's see. So we're bouncing now to, look at that blip up, stopping magically short right at this other proxy. So I'll still identify, here's how much room there is for buying pressure before it even starts threatening to reverse momentum up. It is basically 50, I mean, really no change, 51.25. But we do have a 3-minute high. Now, if there weren't a target outstanding at 33, then we know this 3-minute high to testing the bounce limit. That's the usual attention span of weak-handed counter trend sponsorship. That's the usual attention span of weak-handed counter trend sponsorship. So if the decline remains intact, that means that this is a pretty attractive short entry because we're so close to the 3-minute high, the usual attention span of weak-handed counter trend sponsorship. Even give it a point or two of room for noise. So a 42 entry with a 44 stop as an example. 44 short. Targeting 33, it's 11 points potential reward versus 2 points risk. You have to actually have a stop. You have to have a resting stop. You can't be depending on yourself with a mental stop to pull the trigger because you won't. And it's totally irrelevant what the risk to reward ratio is if there's not an actual resting risk control measure. Let alone the reward, but that's another story. There's the link that I have. I don't know what you're looking at, but let me know if that doesn't work for you. And I will check what's in the blog. Now, if we didn't have the 33 target outstanding, I'd have a buy signal in here. Going to need to see a little more effort, a little more productivity by buyers to basically break this series of lower lows, lower highs, what they've already legitimately triggered to the, what sellers have legitimately triggered to the downside. And meanwhile, being a little bit too big of a bounce, really just under 40.75 is the re-entry. We're testing 44 with an incredibly tight stop. On 3539, that is in the blog, stated as a gap beyond priors, and it's a requirement to fill gaps beyond priors. And no requirement is 100%. And beyond that, how may I help you on that question? I'm not quite sure how you're applying that. I'm guessing this is a shared account because I know we've had this conversation before. So the point to a gap beyond priors is that the or any unfinished business, nothing's 100%. I hope you don't come into the market thinking anything ever can be 100%. But if we get into the orbit of 3539 or of the pattern that was developing into or out of 3539, that's going to be the objective. No other reason to return to any such area. So that's going to be useful then. We can plug that into our risk reward. All right, I'm going to get a little more aggressive on the sell signal here. Remember, we assume we're resolving down to 45.33, and if we just had a bounce and it extended beyond its 3-minute high, it's 1 or 2 point buffer, room for noise, that it's just refueling. That's the assumption. I'm going to come in here 42.25. I'm not getting more aggressive on the buy signal, not yet, but I will soon. Because this is the bias down environment. We're still in the bias down environment. Bounces are still likely to fail. This whole effort is presumably weak-handed because of the window that it is developing and the direction it's trying to develop. Now, once the bias window starts lapsing, and it starts lapsing at 11:30, and it comes within view of lapsing 10 or 15 minutes before that. Once it starts lapsing, that tendency or that sponsorship, if it's not being reinforced, can be reversed and leave that unfinished business below. 45.33 can be left outstanding for something else to develop, whether it's flat to higher. Yeah, we can do a look at NVIDIA. Of course, we're going to do that anyway this afternoon ahead of earnings. But are you ready for NVIDIA right now? I'm probably not going to go down the. Today that's really a Saturday review question when we have time for that kind of stuff. Unless you've got some bigger setup. Are you trying to get a trade off? That's really what the intraday stock reviews are for. I hope that's not a problem. But let's look at NVIDIA. Whoops, this is Lowe's. So there's room in case of a negative reaction down to 77 before suggesting anything deeper like down to 57 and still being likely to recover to fresh highs. As far as greeting earnings, nice pullback here. Get some of that optimism out of the way. Testing lower prior highs. If this is going to react negatively to earnings, it's going to be a negative. It's going to have to gap down considerably to break through this mess right here. It's all overlapping. It's all pretty solid support. Until it's not, but it's probably going to be rejected. If it's rejected, if we look back at this tomorrow and it's been rejected, back under 88 or so. But greet earnings, in other words, closed today. Yeah, yesterday was the sentiment day. Getting a little bit more out of here. Greet today above 98.50 and 99. And on a closing basis, and it would be pretty compelling for a reliable, favorable reaction up. That seems like the challenge. Yeah, I can even add. So room to 479. I'd say there's even room to 488 before starting to suggest. Too deep. Reaction down. But this is already scoped out. Here's the concern I have of what's developed recently is the whole Sam Altman deal was, it's still cloaked in secrecy, but presumably he is pitching an idea for a competitive technology to NVIDIA's AI processing power. So I'm assuming the stock is up because it's anticipating a good number. But could that be peak earnings or peak optimism, let's say, because of what might be coming down the road competitively? Has that shifted the paradigm? But it's very unlikely that this has rejected this probe of fresh lows in this head and shoulders setup. It's taken out relentlessly, but taken out downtrending resistance after downtrending resistance after prior high, higher prior lows, return to the high, just to peak here precisely. So typically we're going to see some probe of fresh highs, whether that's momentary or triggering a bigger leg on this effort. That's unknown. But as soon as it produces a fresh high, a sell signal would be able to form a bigger top. A sell signal prematurely would likely be just a pullback. Maybe NVIDIA buys Microsoft so it can buy Altman, so it can buy the technology. Who knows? That's what I'd do. So, and I'm not doing that, so I'm not divulging anything. So that's the wrench in the works that may have messed up the timing. I can say this to the bigger picture. I mean, it didn't correct to the degree that would help to support longer term uptrend. It has instead hovered optimistically, isolated the one selling effort under prior lows, quickly, relentlessly returned to the highs. So that kind of optimism makes it difficult for this leg to be that productive longer term. So huge turn in gold. Patience paid off on gold. Looking for its pullback 1970. It held. It performed nicely yesterday. Huge response today. Silver as well. Barely pierced its pullback objective, but that was its pullback objective. Now it has not caught up with gold. It led gold, so they are jockeying for position. We're coming into the bias window lapsing. It is now actually lapsing. It's 11:30 basically. So we didn't see anything really unusual coming into view of the bias window lapsing. Still holding bounces. Bounce still likely to fail. It's the product of weak-handed sponsorship. Not quite a 61.8% retracement of it. So I will get more aggressive on a buy signal though, just because if sellers aren't bringing it, then even if we knew with 100% certainty that the ultimate resolution is down sooner rather than later, that doesn't prevent some kind of a refueling bounce. So refueling bounce, say up into the proxy gap itself. That would be 48.50. But the trend otherwise remains down, still anticipating until a buy signal triggers, not that we're going to hover here, but that there is a very live and in-play attraction at 33. And if there's any detour, it'll just be left outstanding and require being tested. So if you're in the YouTube simulcast, any questions that I can address, please let me know. Look in the chat and you'll find a link to a special promotional offer. Cancel anytime, but lock it in and you can have the vidiROOM. Not delayed like it is through YouTube, but live as it is for members. And access to the website and email alerts. So we're coming into the bias window lapsing. We've got some patterns going on here. A stall for sure. Heading, not a stalled, trending, but with such weighty news coming this afternoon, certainly a little difficult to gather sponsorship to extend any trends, but nevertheless, nothing changes as far as the relevant inflection points. In fact, I think we're going to get more aggressive here at 43 on a sell. But the bias down is lapsing, so if the market wants to detour, definitely an opportunity for that. So if it's slowing down to this degree ahead of the holiday week or holidays, holiday days, there's a word for that. Anyway, I'm just wondering how much volatility we can anticipate going into tomorrow morning. All right, bias parameters are published. They're on screen. There is a bounce underway or sideways action. Either one, it doesn't really matter how it's characterized. It is testing resistance at 48, the bias down signal from the morning, or attacking it, but in any case, pretty much expending all available buying pressure without yet gaining traction for the effort. There's a buy signal above it. We're so close to where we know it's wrong to be short. That makes it a pretty attractive short. Regardless of any other factor. Well, there is one other factor that happens to be there's unfinished business below at 33. There's a catalyst FOMC minutes. FOMC minutes apparently, I think more so than the impending holiday, FOMC minutes impending, inhibiting price action just a little bit more so. But I am giving it every benefit of the doubt that it intends to resolve down. Now, we don't have any control over the knee-jerk reaction to FOMC. Not that the knee-jerk reaction to FOMC historically is that overwhelming. But this is the likelier resolution. Then a kind of interesting close quarters double top here. This qualifies. Notice how the two highs are precisely level with each other, precisely identical. Very shallow dip. Very briefly formed, and yet distinguishable two tops. Now, that doesn't mean it's going to break lower. If it does break lower, we expect this formation, a close quarters double tops reversal, to recover entirely. So if that develops, be aware of that. Alternatively, this could be developing into an ascending triangle. Whether that intends to resolve down, false break higher. All right, any questions, please ask. In the YouTube simulcast, don't forget the latency in this room, the delay is because of the YouTube. This is YouTube delaying the broadcast. They don't have any purely real-time solution. Members in the vidiROOM are seeing everything in real time. There's about a 20-second lag, I think, in the YouTube room. I'll keep this room open. If you are still processing, I see that you know where the link is for the promotion for the extended vidiROOM access. We're not going to have another open house, by the way, until if we do in December, it'll be mid-December. And if we do in January, it'll be late January. And either one of those, I'll try to do a two consecutive morning usual thing. But this week, it's just one day. This is it. Tomorrow, I don't want to get too excited about, but you're welcome to join. Try it for a few days. If it's not actually for you, I'll appreciate that. And you can cancel anytime. Or you can do the free trial off of the site. It doesn't come with the 3 free terms of vidiROOM. Whatever you do, please like the channel, the YouTube channel, and follow it. And any questions I can answer for you, please let me know. So this rubber band can't be stretched anymore without starting to snap. Remember, you need at least 3 ticks. 3 ticks of probing to actually be a test. Otherwise, or until then, it is resistance. Start probing it by at least 3 ticks, which this is 4850. This is a single tick probing, overlapping, and then there's an errant tick. Not quite giving the impression that, at the moment at least, that it's inflecting up. And until it is, I can be a little more aggressive on a sell signal up here at 45. But that's the signal. The actual execution, there's nothing that prohibits selling the buy signal, selling its test. We know there's an objective outstanding below. We know it's the noon hour. It's premature for this to necessarily require triggering a gap up. We know the FOMC minutes are oncoming, and that's going to inhibit trending. You can always, it's just a really attractive short entry too, because of how close it is to where we know it's wrong, to where we'd limit the loss to its least possible amount. So we're past 61.8% through the noon hour and not yet reversing down, not yet rejecting the bounce. Between the holiday shortened week and FOMC minutes coming in, I'm inclined to view this counterintuitively or contrary to what I'd expect the pattern to produce or how I'd expect it to behave under normal conditions. So I don't want to sell signal or take a sell at 47.50, but just identify that's how much room there is for a reaction down without it yet signaling momentum is reversing down. And I'll certainly try to tighten that as possible. All right, as we come into 120 and the bias timing window triggering, notice that the bias up signal was tested. It held its test. If this were a morning event, we'd expect an offsetting test of the bias down signal, but that's not the case in the afternoon. It's really all, I think we're just in a function of funk, really, of the FOMC minutes coming out shortly and getting that out of the way. Then we can get inhibited by NVIDIA results coming out shortly after that. So a little bit of ranging, range bound, but still buyers failing, getting rewarded, reversing back under their inflection. Anything lower in here, I would expect to extend down all the way to test the bias down signal. All right, so we've had the YouTube simulcast open through the noon hour Eastern time, and I hope everybody had got to learn something. It wasn't a great session to learn stuff, except we did get to see some anticipated events in the market, anticipated behaviors, the proxy gap, its influence, how to calculate it, how it's influential, what it means. The noon hour, of course, counter trending, putting in a bounce, and now anticipating that unfinished business left outstanding. Here's that morning open, the bias that was delayed, then coming back like somebody throws a switch, and there it was. So if you want to see more of this, of course, there's that link in the chat to the special savings. And meanwhile, have a great Thanksgiving week. Take care. Also, of course, don't forget to like and also follow the channel so that you'll know when this simulcast reopens. I think we're going to do at least try to do something in December, mid-December. 2 consecutive mornings. You'll be notified if you follow the channel. All right? Best wishes.